Hey guys, welcome to today's market update. So as you know, as you might know, we had some technical issues this morning. So the first 15 minutes of me speaking were not recorded. Well, it was recorded, but the audio was not. So what we're gonna do now is we're gonna quickly go through all the different charts. And what I was saying this morning is that we have a interesting sort of risk on move here. You can see that the German DAX and stock market futures, these are the American stock market indices. You can see they're clearly up, and that is lifting something like the dollar versus the Japanese yen. But in the case of Euro USD and GBP USD, they're rather unchanged, and all the other markets, most of them are unchanged. Crude oil prices as well are just trading sideways, and gold is really unchanged as well. So we have a bit of risk on here. Don't know exactly what actually triggered this, but we're going to talk about it. So let's begin first with what's going on with the dollar versus the Japanese yen. So the dollar versus the Japanese yen is upwards, right? And a few days ago, I said that people probably going to sell here, and this is going to present us with a decent residual ratio. At the end, the market did slide, and it gives us a residual ratio of about 2.7, 2.5, depending on your actual entry. Now, over the last few days, I've been saying that people probably going to short here. Now, I didn't really get that entry perfect because we had an overshoot of about 40 pip. But we're still about 100 pip away from the stop loss. And what I was saying is that I wouldn't get too worried because the market goes from being super excited one day to sort of super excited for a few hours, and then it sort of goes all the way around. So I wouldn't get too excited about this. This continues to be a downtrend. As for the German DAX, it's up quite significantly. And a few days ago as well, I said look to sell here. Market moved down a bit, then it moved up again, and then it moved down. Now, what's happening with the German DAX though is it's starting to look like an inverse head and shoulders. Again, I don't know exactly what's actually been driving this market upwards, but the trend is bearish below the August 8th high. And below this level, I'm going to continue to be bearish. On the other hand, if we take out the high, we're probably going to go up and trigger this head and shoulders. You get yourself a left, right shoulder, and a head. As for the S&P 500, it's up a bit, but as I was saying, is that the economic outlook hasn't improved. In fact, it's turned worse. And some of the guys, like for example, Nordea Markets, they were being bearish on the markets from the beginning of 2018, and they talked about an economic slowdown. Now they do admit that the economic slowdown wasn't as strong as anticipated, but they don't really foresee any major improvement in the world economy, and until the end of 2020. From there, it should be things should turn up. Why? Because U.S. interest rates have declined strongly. You have a situation where central banks are cutting interest rates, and you have stimulus kicking in. ECB might even do QE in the next few months. So all of that plays into and sort of supports stock markets and the economy, but that effect is probably not going to be felt until later in the year and later in 2020. Now, what's also interesting is that a lot of the hard data, even at times of recession, so the last one was 2009, 2008, the numbers would look really, really good when we're having them. Well, the leading indicators are telling us that actually the data was not good. But now, because of some of the hard data uses like statistical modeling to predict, they use like a trend component. So which essence means that they look what happened in the past and sort of try to use that information to see what happened this month, for example. That influences the number. So the number was positive last month, and now you have a new number out. It's still going to be a bit positive. And the reason for that is that realistically, the statistical agencies that we use across the world, they don't have the opportunity to ask everybody, like, how much did you make, like to sort of try to figure out what the GDP is. It's actually more complicated than that, but you get the picture, right? So they do a lot of estimations. So what they were saying is that the hard data might actually not be as bad. For example, in Germany right now, the numbers are not that bad. In the UK, they're not that bad either. And in the US, they're definitely not bad. However, the leading indicators, which is based on soft data, so surveys, that is actually indicating, according to them, that the US economy is already at 0% growth. So in general, they think things are going to be sluggish, which means dollar yen is probably going to trade lower, which also means that S&P 500 is probably going to trade lower as well. And also, what's interesting is that trade wars, things have not improved. September kicks in, we'll have higher tariffs, and then December kicks in, even more higher tariffs. So that will definitely weigh on the economic data. So overall, I think we're probably going to trade lower in the markets, but technically, the markets remain bullish about 2,804, and we're now going slightly upwards. Then we could probably seek ourselves to 29.25, but I don't necessarily think we're going to trade about 29.41. If we do, we'll go a little bit higher, but you're going to have some aggressive short sellers up here with stops just above the yearly high. The only sort of based on sound technical analysis trades that I like right now is just buying dips here. But again, because my macro outlook is not good, I wouldn't actually be buying here. Dollar yen is a good alternative to short stock market. Now, crude oil prices are just trending sideways, and this is something we talked about for quite some time, and the market is just trading more and more and more sideways, which is fine. This is what we're looking for. And it's a bit like, like a genie in the bottle, if we had that. When genie sort of escapes the bottle, or as we say as well, Pandora's box, which again is based on a story, or it's a story. Everything sort of wreaks havoc, and I think something similar is going to happen here. Things are narrowing down. Now, I have no idea if it's going to be bullish or bearish, but given the economic outlook, most likely it's going to be bearish. So if we take out the lows, the June low, we can have significant decline. On the other hand, take out the August 31st high, we're going to trade significantly higher. As for Brent crude oil prices, the trend remains bearish here, but as well, unfortunately, is also indicating we're trading into a massive triangle, which is quite unfortunate because S&P is trading sideways for 1.5 years. You have crude oil prices now trading sideways clearly, and you have the euro dollar trading sideways. As for the pound versus the USD, the market is trying to trade slightly lower. So yesterday you had that big decline. The reason for that, as you know, is because Prime Minister Boris Johnson decided to suspend Parliament. So they're still going to open next week, but then they're probably going to try to push and say, look, we're going to have a suspension, and we're going to be back, I think they said October 14th. That's not going to give enough time to sort of be able to put laws in to prevent no-deal Brexit. Now, what I was saying before, when there was no audio on, is that it might not have been a message. I mean, this domestically is like, if you read any of the newspaper on the front page, it's like outrage. Like this is sort of stopping democracy and so on and so on. If you read international press as well, it's very similar. Depend, of course, on what you read, right? I didn't visit Britbar, but probably it's going to be a different tone there. What I'm saying, or what I'm thinking though, is that what if it wasn't? If we try to put ourselves in the shoes of, say, Donald Trump, what if Donald Trump was president or the PM? Then this is what he would definitely do this, because it might look like a domestic issue, but it's also putting pressure on the EU. Now, EU is a different negotiating, like the different in negotiating here. But what's interesting here is that by delaying or suspending Parliament, they won't be able to negotiate a deal. It won't be. They will probably fight, but technically, or it should practically be that they don't have time. Even if they would give them a good deal, they won't have time to rectify it unless they come back early, I guess. So I reckon that maybe this was a sort of a message to the EU to force them to do something. And they might come back early next week, because that's what they need to do, unless we're going to suspend Parliament. Now, the problem with that, though, is that it also means that the GBP USD will be more influenced to gaps going forward, because any weekend you can have something, and it could be good, it can be bad news, and it's going to start to gap, so you need to be really, really, really careful. Now, looking at this chart today, technically, We slid below, and as I said yesterday, I was trying to tell you it's better to take it easy and see, where the market would land. And you can see now, for now, the trend remains bullish. You can even draw a trend line here if you wanted to. But if you take out this low, this market is probably going to start to trade down lower. There's a better market though that I prefer, and it's GBP USD. And you can see here how we're dealing with a nice uptrend. We're relatively close to support, which gives you a decent risk reward ratio. Even if you wanted to take a long position right now, stops below. If we do start to reach, say, prior highs, that's a 1.16 times risk reward. Should you go up, you got yourself a 2.54 times risk reward ratio. If you want to wait, then you're looking for a break here to the upside. Alternatively, sort of buying really close to 90.27. There's one thing you need to bear in mind though. Again, with the gaps, it's probably going to be very difficult, and we don't have to trade these events. It's really important to remember that. People got all excited about 2016, and yeah, you could have made a lot of money. I made a bit of money. The problem is that when the market starts moving, the stop loss you need to have has to be wider as well. So you would have made a lot of money if you would have been able to enter a good level and then sort of put stop losses in. But even there, to give you an idea, like I was talking with a friend of mine that used to work for Merrill Lynch, I think it was. And on the 2016 referendum, I mean, it was super difficult. Even if you had a bearish view, look at that. The market went down to your favor. Say you shorted here, just for the sake of it. You shorted here, right? You got like a perfect entry at 147. And then GPUC declined. And then at the run-up of the election, the whole thing goes upwards. And it takes out your high. And then the market, in essence, pushed upwards here with 274 pip. This would have been enough to get most people out. And then of course it managed to move lower here. But even in 2016, if you would have said that you wanted to short on election day, where would you put your stop loss? You would put it up here. And then yes, the whole market declined. So you would have done a 7.32 times risk reward ratio. But a 7.32 times risk reward ratio, you can find those without the need of having a referendum. If you really enter at good levels, you will sometimes have the ability to find those sort of setups. So you don't have to trade the referendums. And yes, if you were cool enough to short at the very high and you got yourself a crazy return, then you're probably just lucky. That's what I would say. So while it's all interesting, and it's definitely going to be possible to make money, I will be very careful holding positions over the weekends. So it's probably better to trade Sunday evening, Monday morning, close the position by Friday, wait for the new week, and then try to trade it instead of holding positions. Because when things gap, they can gap badly, and if you have a big volume size position, you can lose money quite quickly. Okay, so I think we're going to wrap things up now. Guys, thanks so much for watching. I don't have any questions, and sorry about the issues here with the sound. I just made a recording now, a separate recording, which I'm going to upload. Have a good day, guys, and I'll see you guys on Monday, because I'm actually off tomorrow. So see you guys on Monday, and have a great weekend. Thank you, and goodbye.